on inflation is more ambiguous because it depends upon what other countries do in response. It depends on what the consequences of those actions and reactions are for trade. To what extent does trade get redirected and what effect does that have on the price of traded goods? And it also depends upon exchange rate movements as well.
I did read in the NPR that there is an assumption. I want to know if it's a central assumption because of our the importance of service sector sales and financial community to the United States, that we are less susceptible to tariffs. Do you believe that we are likely to avoid the worst impacts of US tariff policy because of our focus on financial?
Well, I think there's two things I would point to. I'm not part of any considerations of these, so I'll only act as a sort of observer, really. One is actually the UK does not have a substantial trade imbalance with the US. Secondly, you're right. UK trade has a larger share of services in it relative to goods than is true for many other countries. Now, one qualification of that, as many people will point out who look at this in detail, some services, not financial services, some services do depend on goods. So they're the servicing of a good contract. But you're broadly right that I think there's more services in UK trade. Financial services is part of that. So tariffs, classic tariffs, don't really work in the services world in the same way.
Final question, Governor, just on the short-term inflation outlook. It's going to be very, very tricky going up to the third quarter, getting up to 3.7% to justify further rate cuts, isn't it?
Well, we always have to look out to the 2 to 3 year horizon. So we will go on looking at to what extent we think there are going to be any persistent effects from this bump up in inflation that we're going to see. And we will have to go on looking very carefully at the process of disinflation that's going on underlying that, particularly in services. And we will have to look very carefully at this mix of supply and demand in activity in the economy.
Governor of the Bank of England, Andrew Bailey, talking to me earlier, and as you can see, there's the gilt yields pretty flat on the day, despite the fact that, as I said to you earlier on, there was a real downtick in yields as people rallied, bought the gilt and thinking, oh, hang on a second, we're going to have a lot more rate cuts as well. But again, dovishness on the headline on the cut, dovishness on the 7-2. Governor Bailey talking to me there about the delicate equation and how they have to be careful and calibrated in their decisions. And as I say, I saw a lot more nuance about rate cuts going forward than the market did initially. That's why, as you can see there, the yield picking up a little bit later on. I feel a little bit vindicated, I've got to be honest. Anyway, that is it for now. We are going to hand you back to our colleagues stateside, and tomorrow morning on Squawk Box Europe, we'll carry on with our analysis of the Bank of England rate decision. That's it for now.
Immigration that has largely been missed in the household survey over the past several years. Okay, before this change, the biggest upward move was 2.5 million in 2000. It's not there on that chart, but the recent adjustments of minus 0.5 million, as Sarah just said, and then plus 1.1 million in 2023. Take a look now. The government expected to announce a
We're also going to get a yearly revision aimed at better reflecting population growth. That could cause some confusion about the numbers. CNBC senior economics reporter Steve Leisman here to explain. Last time the revision was for sharply lower job growth. What do you expect tomorrow?
Yeah, put your seatbelt on, Sarah. It's going the other way. With tomorrow's jobs report, the government is set to release the largest upward revision to population, labor force growth, and jobs in the history of the household survey. The reason the Census Bureau using some new methodology to account for the surge in immigration that has largely been missed in the household survey over the past several years. Okay, before this change, the biggest upward move was 2.5 million in 2000. It's not there on that chart, but the recent adjustments of minus 0.5 million, as Sarah just said, and then plus 1.1 million in 2023. Take a look now. The government expected to announce a 3.5 million upward revision, dwarfing all those other peaks, which will account for immigration over the past several years. But it puts the change all in January of this year rather than revise the prior year's data. Goldman Sachs estimates the upward revision of population will result in population growth. There's the 3.5 million. Employment growth plus 2.3 million to the household survey, but only a very modest 4 basis point change to the unemployment rate. This should not impact tomorrow's payroll number, estimated at 169,000, which will be down from 256 in December. but it should move employment in the household survey much closer to the more closely followed payroll survey. You can see the gaps there have been huge. Weak household numbers have been a reason some thought economic strength was overstated. That argument largely goes away. The new challenge, though, mass deportations promised by President Trump. Forecasters have to figure out what role immigrants have been playing in this economy, the effect of deporting them, what it will have on jobs and consumer and social service spending. We could be, Sarah, reducing this upward revision next year in a big way the other way. Tomorrow we'll get a chance to talk about a lot of these issues, revisions, jobs, the 10-year, with our exclusive interview with Minneapolis Fed President Neil Kashkari. That comes at 8:40 a.m. on Squawk Box. Guys?
I'm trying to think, are the revisions usually market moving because they are so sort of backward looking?
You're absolutely right. They do end up in July. I don't know if they're market moving, Sarah, as much as they are kind of for the people that think about demographics and what that means for revenue. You know, some of the consumer spending companies that you follow, Sarah, consumer discretionaries, that think broadly about the thesis of demographics and these kind of issues and the employment levels, it will have an effect on their thinking about it, trying to figure out what it means that now we know all these people are here and that now a chunk of them, and we don't know what chunk, will be leaving over some period of time.
All right, Steve, thank you. We've got a lot to digest tomorrow morning. Steve Leisman. When we come back, Ralph Lauren beating estimates, raising guidance. The stock now up more than 90% in the past year. It's having a 12% move right now. Well, it is dramatically reducing its dependency on China in the past few years. What impact will there be from new tariffs? We're going to discuss all that.
Philip Morris having its best day since October after posting a beat across the board. CEO is going to join us, another international company with possible tariff exposure. That's all coming up.